you've been entertained with fun stuff. You get
This meeting is being recorded.
perfect. You guys good out there? Zoom? Perfect.
Maybe around your face on. This was scary. I'm just kidding.
That close? You don't want it that close. No problem. Maybe I'll pull it real quick. Sorry for being late. Thank you for being patient, hanging around. Let me open this real quick. Everyone doing all right? Yes. As good as we can be. So were you guys really talking about passports, or are you making fun of me? Making fun of me, or no?
No, actually.
No,
Really passports, yeah.
they're not bad. Well, one of our daughters had to get hers renewed, and they were pretty quick.
Not what I was expecting to see.
All right. Right there. All right, so I figured today, so first of all, for those of you who I don't know, most of you look familiar. So I'm Justin Cerrato, attorney with Blue Ocean Title. We're your title partner here with KWAP. So we do these classes probably once or twice a month. So for those of you who have been to one of my classes before, they're relatively informal. I'd rather it be collaborative than me just talking at you the whole time. So feel free to interrupt with questions, comments, anytime you wish. Same thing, you guys out there in Zoom land, just ask away. So our topic du jour is Title 101. So what I figured we'd do is just kind of explain, the purpose of title insurance, the types of policies, the rates, who pays it, kind of some basics of a title commitment. And I'll preface that by saying I don't expect you guys to be able to fully interpret a title commitment. That's our job. But at least when we ask, you to ask your customer, or we go right to your customer and ask a question, you have somewhat of an idea of, maybe why we're asking for that information. So just for you all to have a general working knowledge. And then last but not least, just kind of touch on what the ever dreaded title claim and how that process works, and again, who pays those claims out. So any questions before we get started? And if you guys think of something or want to touch on something outside of that, feel free. I'll probably talk at you for 15 minutes or so, 20 minutes, and then we'll have some questions and some group discussion if you wish. So first off, so are all of you, who's brand new? Okay, all right. So when I say title insurance, you're probably like, what are you talking about? So the purpose of title insurance is that it protects the new owner for any sort of like fraudulent transfer, for some sort of hidden lien that wasn't discovered, or in the chain of title that maybe wasn't picked up in an exam. So it relieves the owner of any sort of financial liability for an issue stemming from one of those bigger issues, let's say. So it's a one-time premium. So for so long as the owner owns the house, that policy is valid. It's not an annual renewal like a hazard insurance policy. It's just a one-time thing. In this market, typically the seller pays for it. Like anything in a contract, it can be negotiated. It's just kind of common and customary for this market for the seller to pay it. When they purchased, that seller probably, paid for the title work in that transaction. So types of policies, typically you're going to have an owner's policy, so a title insurance policy that protects the owner's interest from those very things I mentioned earlier. And then you're going to have, if the acquisition is financed by the owner, you're going to have a policy issued to the lender. That's not so much your concern. Basically, in a nutshell, what that does is it protects the lenders to their lien position. So it says, hey, lender, no one else is going to come forward as far as, you know, having a superior lien position to your mortgage loan. That way, you know, they can clear the loan, fund it, close, knowing that, hey, in the event there's default, we have to foreclose. We don't have to deal with any other issues but our borrower in that sense. So I could talk about, you know, endorsements to those policies and bore you to death all day long with those. I won't. Leave that up to the lender. They know what they require. But when you're going through an ALTA or closing statement with your customer, when you see title insurance endorsements, at least you know why they're there. So it's an endorsement, just like a rider to any other title or any other insurance policy. It's going to provide additional coverage to the lender, basically. So I'll give you a quick example. Fence. So there's a fence encroachment. Let's say a fence is constructed 2 feet, you know, onto the neighbor's property, or the neighbor's vice versa is constructed 2 feet onto our property, the insured property. We can issue an endorsement to the lender because we're saying, hey, the risk is nominal for that. You know, in the event that fence more or less has nothing to do with the lien position of that lender's loan. So yes, it's there, but we'll issue this endorsement so that the lender has no concern. Good.
Yeah,
And
someone's
we were
just.
present.
Yeah, but no, someone was trying to get on, I guess.
Gotcha. So again, 2 types of policies. I mentioned, you know, common and customary for the seller to pay. You go up to Nassau, you go south of Daytona, it's the opposite. You'll see that the buyer traditionally pays. It throws everyone off, especially if you do some work up in Nassau. And that's important because, again, it's tradition that the party paying for the title work, the title premiums, selects the closing agent or where it's going to close. So, you know, again, up in Nassau, the buyer typically selects. Other markets you're likely working in, seller's going to be choosing. So title insurance rates. This is a question we get all the time. You know, people call and say, hey, can you give me estimated fees? Well, I'm sure most of you have learned that much of the fees are predicated on the purchase price. So in other words, you know, your state transfer tax is based on the purchase price. There's a formula for it. Same thing with the title insurance. So again, not to bore you with details, you can jump online, you know, our website, put in your purchase price. We've got closing cost estimators. You can Google a title insurance calculator for that matter. But just FYI, it's $5.75 per $1,000 of the purchase price, or the insured amount, I should say, up to $100,000. You go above 100,000, it's $5 per thousand, up to $1 million, and then it goes down to $2.50 per thousand, million up to $5 million. I stopped there. Hopefully you guys have transactions above 5 million, but I figured for the majority of us, that was probably a good stopping point. So before I get, well, no, let's jump into, so any questions so far? That's just kind of a brief overview. Good questions, comments?
Any circumstances you think it would not be needed?
So good questions. So, and that I have that noted here. So keep in mind, title insurance is completely optional. That's how we generate revenues. That's how we profit, is we get a portion of the title premiums. Full disclosure, transparency. It is optional. Now, if it's financed, the lender's absolutely going to require it. So in that sense, if a new soon-to-be owner says, well, I don't want title insurance, but they're financing it, I say, look, you're paying on the loan amount. So let's say it's, you know, 80% of the purchase price. You're already paying several $1,000s for that policy. we issue, if we're doing it simultaneous, so in the same transaction, we issue a owner's policy for a nominal fee. It's a couple $100s. So it's like, the question is, for a couple $100, if you're going to own this place for 20 years, you look at it as, 10, $15 a year, probably wise to just say, fine, issue it. Now, let's say it's a piece of dirt that mom or grandpa owned, built a house, passed on, several generations, and now, great grandson is purchasing it. In that instance, they may say, well, I know that dad, built this house with his own two hands and it's passed along. My comment to that would be, well, how did he acquire the dirt? He had to get it from somewhere. Maybe there's some easement along that property that you weren't aware of. It's just changed hands and somebody's been driving over the corner the whole time. You may be fine with it. You may not be. Same thing with, when it always scares me when I say, well, I inherited this property. Well, did you really? Was it yeah, I'm giving this to you on a handshake, or was there legal documentation that properly documented the transfer throughout, generation over generation? So in that scenario, I would at a minimum say, well, let's just run a title report and see, because again, there may be, someone died and death certificates need to be recorded. There may be affidavits that are necessary to clear certain matters. And at the end, it all works out. But, when that person goes to sell, they're going to have to do this work anyway. Or they may have issues or something that, presumably holds up a sale or delays the sale. If you got to chase down some affidavit from some family member who's, completely estranged. So that always worries me when people say, this was grandpa's house and I, inherited it because, and then you come to find out they've got 6 other siblings and they're all on different pages. So that's always a concern. But good question. So, so far as kind of the basics of the title commitment, and I'll just kind of walk you through the process, the protocol, kind of what we do as a title agent. So anytime we receive a new order, so a new contract, and we're handling it as far as the closing the title, issuing the title policy. So we'll open up an order. We order a title exam from a professional examiner, let's say. So that person will examine all of the public records that are, anything recorded, court dockets, under that name, bankruptcy filings, anything that is pertinent to that property or presumably creates a lien or some sort of encumbrance against that property. In turn, that examiner will put together the title commitment. There's several schedules in that title commitment. So, and for example, so anything that would show up in that exam, it's going to show any sort of, deeds, mortgages, easements of record, covenants and restrictions, recorded leases, road agreements, shared well agreements. I mean, the list goes on. It could go on and on. Judgment liens. So the elements of the title commitment, and again, I'm going to get your email addresses. I will send this to you because this is kind of like a 2-page cheat sheet. It's basically it's going to list, the current owner, and you may think you own it, but then here it's revealed all 4 of you own it because, there was some deed along the line where your parents vested out half of their interest, and these are your, your stepdad's 3 children, let's say, and that's all just hypothetical, but it'll list any party that's interested in, that has an interest in that property. It's going to have the proposed insured, so that's going to be your buyer. It's going to have the proposed lender if they're financing it. It's going to have the proposed insured amount, which is usually the sales price. It's going to have a legal description of the property. So, again, you may want to look at that when you receive it from the title agent to just say, hey, this is supposed to be 2 parcels. Why is only 1 parcel listed? This may, quite honestly, they may have, forgot to examine that 2nd parcel. So just kind of a checks and balances there. So that's Schedule A. Schedule B1 will reveal all of the requirements. So this is where we come into play. So those requirements are more or less our marching orders to clear title. So again, we don't physically examine the public records or any of that. We get it from an examiner. We get these marching orders. We as an agent will, we have the relationship with you all as realtors, with the customers. We're the boots on the ground for clearing these matters. So it would be anything from, as simple as just getting a payoff on a mortgage, getting estoppel certificates from the homeowners association. There may be some judgment lien. We got to reach out to a creditor and work something out for a payoff. If it's a divorce scenario, we have to get a copy of the divorce decree and, make sure that, one person is entitled to the total proceeds. There's not some sort of equitable interest that, an ex-spouse had reserved in that divorce decree. It may be a matter of getting, let's say like a road agreement. If it's a private dirt road, and if there's a lender involved, they want to know that that road will continue to exist, that it will be maintained, and that that property, their collateral, will never be landlocked. So, when you get into more rural areas, it becomes an issue because you may, again, maybe a scenario where there's a parent parcel, it's been chopped up and subdivided 6 times. There's gravel roads. People just have used these gravel roads for years and years, but then somebody goes to sell and the buyer is financing that transaction. And it's like, well, now we got to chase down these 6 parties, put together an agreement that says, okay, we agree that this road will remain. We all agree to, at least some party has to agree to maintain it, because the lender will require that. You get into like a shared well agreement, if the well is physically on the neighbor's property, but this person, the neighbor, utilizes that well, again, you want something in writing, spelling out the rights and the liabilities, the obligations of each party. So that's going to be your B1 requirements. And that's where, we may be asking your customers, hey, we need this, or we need to know if when your mom died, let's say the deed didn't list a marital status. We need to know if she was married, or if this wasn't her homestead, because we may need to fix some issues. If that was mom's homestead and it didn't list her as a married person, she was married at the time she sold it, her spouse had to join in. So we just have to get the appropriate documentation to clear those type matters. Let's say the homeowner has recently put a new roof on the house, so they file a notice of commencement when they pull the permit. We need to make sure that contractor's been paid in full, because that contractor has lien rights until they terminate that notice of commencement. So we get an affidavit from the contractor that says, yes, we've been paid in full, and we waive any lien rights. Then the owner terminates it. You get into stickier scenarios when properties are bought out of a foreclosure, at a foreclosure auction, maybe acquired title by way of tax deed. Those are not immediately insurable. We could have a whole separate class on tax deeds. You're always welcome to reach out if you have specific questions, but again, I won't bore you with those details. So any questions on the requirements? So again, that's our marching orders. That's what we do. We're the boots on the ground. We're clearing all of those matters. Anything there? Yep.
So if anything comes up, you make sure that it's cleared.
Yeah, we have to. So if we fail, so if there's a requirement and we just overlook it or fail to do it, or just say, hey, we're going to take the risk and just ignore it, then, yes, if there's ever a claim, so it would go up to the big boys, let's say, and they would say, well, hold on a minute. We told you to do this, you didn't. So now we're potentially on the hook. So, but yeah, so those are our marching orders.
So it's based on the purchase price or the more?
Was that the rates?
Yeah.
So the rates, it'll be the higher of the two. So if it's a simultaneous scenario where we're issuing one to the owner and one to the lender, yeah, it goes off the higher.
We're going to do it in the past. Yeah, so if an investor paying cash, it would be up to
100%. Yeah. Yeah. And on that note, so there's, and if we see that the property was acquired, let's say a year ago, we will ask and offer it. Most title agents do, not everyone does, but there's such thing as a reissue credit. So if you've only owned a property for 3 years or less, so it's a quick turnaround. So basically, someone collected a full premium at the time they issued that policy. Now you go to sell a year later. I mean, that policy only existed for, a year. So if that seller can produce a copy of their title policy to us, then we offer a reissue credit. So it's a discounted rate on that policy. So anytime you refinance, because title doesn't transfer, so there's a reissue credit due. So if you bought a house 2 years ago, you refinance it today, you pay a discounted rate on the title premium for the loan policy, or if you've owned it less than 3 years. So if you know that to be the case and the title agent never mentions it, you can do your customers a favor and just ask the question of the title agent, hey, they just purchased this 2 years ago, here's the title insurance policy, and you'll look like a hero because you'll save them, maybe as little as $300 or $400. It could be, in excess of a couple $1,000 if it's, if the purchase price is high enough. So, all right. So those are your B1s. Your B2s. These are going to be most important for the buyer because the B2 lists all of the exceptions to coverage. So just like any other insurance policy, there are exceptions. It's just not blanket coverage. You own this and you own it. Free and clear, every little detail in the world. The exceptions, there are very standard exceptions that are listed, which with a document or two, we automatically remove without question. The things that you may hesitate on are waterfront property, for example. That policy is going to exclude coverage as to ownership from the rear lot line. So if you've got, I don't know if you guys see this. So let's say street, back line, water. That policy is only going to cover to that line. Anything constructed seaward, so your bulkhead, your dock, that's not insured. So if there's ever a claim to ownership, unless you physically own into the water, so you own the underlying, the bottom of the water, you have riparian rights to that land, which, maybe in a neighborhood you have like part of a pond or part of a lake, but say with, the intercoastal, you're not going to own anything beyond the lot line. You may own, let me back up and rephrase that. You may own it, but it's not insured. So I've got an example, a real, life example right now. It was a parcel. You've got road, parcel was split. There's a home in the back that's on the water. You've got a front parcel. This front parcel, there's a pedestrian easement that allows him access to the water. He's used it forever, basically to go fish. He and back neighbor pulled permits with the DEP and the Army Corps, constructed a dock, pooled money together, constructed a dock. Waterfront parcel sold off. There was no agreement in place as to, a shared dock agreement, let's call it. So now rear guy is saying, well, yeah, that's my dock. I paid $2 million. I expect to have a dock. Front guy's just, nicest guy in the world, doing everything on a handshake. And now these two are, bickering over who actually owns that dock. Well, the closing agent, sure enough, I got a copy of the title policy, and just, as it should, it says, it's insured up to the water line, basically. So there's a question as to ownership of that dock because it's built into, jurisdictional waters. So it'll be interesting. I had to pass it off to someone else because just for conflict reasons, but I'll be interested to see how it turns out. But I think if, that front guy can produce evidence that, he paid for half and, the electric, in fact, comes off his meter out to the dock. So it'll be interesting. But, again, he was doing everything on a handshake.
Hopefully he saved everything.
Huh?
Hopefully he saved everything.
Let's hope. Let's hope. But I know the seller and the buyer of that waterfront parcel were chummy drinking buddies. I don't know if they will be moving forward because that seller should have known and should have said something. Hey, this guy up front can use that dock.
Absolutely.
I don't think he ever did. And he just took his $2 million, benefited from the idea that the dock's there, and we'll see how it shakes out. Yeah. Good way to start. And the front guy wants to be neighborly. He was neighborly with the seller, and he's like, I've been, back there. That's all he does. He's retired. He fishes there, 5 days a week. So we'll see how it shakes out. But just FYI, when you get in the waterfront, there's always a question as to ownership. So, it's never a bad idea to either have, some sort of a bill of sale or an assignment, or, again, some sort of shared maintenance, shared dock agreement, however you want to title it, as to who, owns and is to maintain that. So anyway, and I failed to mention too, the waterfront guy is on septic. He would like to tap into city. He's going to have to go over that front person's dirt. So he has at least a little bit of leverage there to say, fine, you want city water?
Karma.
You want city water? I get, It's a
Gotta love it.
number of moving parts. So we'll see.
So if we hypothetically have a listing that's on waterfront property and there is a dock back there, should we be asking the question as to
Yeah.
who owns it?
Yeah. I
Who has
mean,
rights to it?
this is more of a unicorn, my scenario, but it came up. So yeah, it never hurts to, and you could quite honestly, so you could call the building department, assuming they permitted it.
This is Florida.
Right. And just say, hey, I just want to verify that there was a permit pulled, and and I would get with your seller first, because obviously you don't want to open a can of worms if not. And maybe just get a copy of it showing that the permit was pulled in that person's name, and just verify that, yeah, hey, we pulled it, we paid for it.
Well, some of those docks don't have to be permitted because they can be a floating vessel.
Correct.
And so it's like having a boat. Basically,
Correct.
you have to license it every year.
Yeah, it has a sticker, a tag, state
Yeah.
tag. Yeah. But this one I'm talking about is a double rack. Yeah, I mean, it's a substantial structure. So, but yeah, it never hurts to ask the question. But that's a big one, because you got to explain to your person that you don't, nothing's insurable beyond that rear lot line or the waterfront lot line. You would have, it's going to list out like covenants and restrictions. So like you're required to follow those. If you can't have a work truck in the driveway, that's not a title claim. You should have read the covenants beforehand and known. You're going to have like mineral rights. Not that you see that every day, but again, more rural areas, they're not insured. They're not saying you own it or someone else owns it or who's entitled to it. It's just going to say, we're not covering this. If something comes up, that's on you. Unless, I've seen where if it's a private individual who has reserved those mineral rights, you could approach me and say, hey, are you willing to just lift those mineral rights? And I may say, fine, give me 50 grand. Or I may say, yeah, I don't care. This will never be mine, and just waive it. Now your buyer has that. But they could ask the question. A lot of the times you'll see where those mineral rights are reserved by the state, from way back when. And quite frankly, there was some legislation that came out a couple decades ago now, but the state of Florida may be entitled to like royalties from any minerals, but they have no right to excavate. So they have no right to get to them. It's only if I own dirt and I strike oil, I may have to give some royalties to the state. Trying to think of some other examples. So, again, easements, there's a recorded easement. That's going to be an exception because it's recorded. Anything that puts the owner or potential new owner on record notice, meaning it's recorded, those things are going to be excluded because you had the right to read it, know the terms of it, ask questions. So again, those are your exceptions. And again, that's where you know, if your buyers either coming from out of state, out of country, has questions or concerns about anything like that, it may be worthwhile for you to say, yep, you know, I don't wholly understand this, and that's perfectly fine. Let me put you in touch with someone. You know, you can ask the title agent, even if it's not someone you have a relationship with, just say, hey, can you explain this exception? Or, you know, reach out to us and we can, you know, we do like buyer reps for relatively nominal fee, and we'll go back and forth with the title agent and ask the questions. So again, it's just,
If somebody pays for it and they get it, and then everything's checked out, they go to closing, everything, and then something pops up after closing, does the title insurance cover if there's fees or costs, all that stuff, since they had done a check before closing and then they bought it saying, oh, the title's clear, everything.
so yeah, so the policy is going to cover up until basically when the deed's recorded. So let's say you close, the deed's not recorded for a week, we cover that gap period. We have something from the seller, the buyer, that says, hey, we're not going to do anything, you know, the seller really, we're not going to do anything in that week, that gap, because there is that gap coverage, right? But you're saying if you close today and a week from now, someone files something,
Well, I
or
had
are
a
you
friend
saying
who
something
bought-
prior to
Yeah, I had a
closing?
friend who bought an investment property and paid for title, they did everything, they cleared it, they bought the property. The president of the homeowner association came over and said, here's a bunch of due stuff, and gave him like this packet. And there were bills in there, and so they were like, wait a second.
So it was for
Was this
assessment.
title insurance supposed to check the homeowners and
Yes.
so their title insurance actually covered?
Yeah, 100%. They should have. Yeah, because they were required to get an estoppel certificate or some evidence, some sort of statement from the homeowners association as to the status of that account.
So stuff like that would be covered.
100%.
if
Yeah,
it
yeah.
Shows up.
After, right. So it sounds like that closing agent just forgot to do it, ignored it, just said, you know, the seller told us it was all paid current, you know, closed it, and then here you are. So in that case, you know, you would file a claim, which isn't always, you know, timely process.
Yeah.
You know, you may be waiting or may hold up, especially for investors, you know, may hold up something. That not so much, but there are scenarios that, you know, it may put a dampen their timeline. But yes, it would be covered. And probably that agent was on the hook for it, unless, you know, the examiner just failed to recognize that there was a homeowners association, you know? So maybe that wasn't in the marching orders. I would find it odd because, you know, if it was all properly documented so far as the contract, there should have been a, you know, HOA disclosure, you know, which would catch my eye. And I would say, you know, even if it wasn't in the,
Right, yeah.
yeah, so I mean, there's numerous ways you could confirm that. You know, where it gets a little sticky is if it's like a civic association more so than a formal association, or like a voluntary association. So the confusion there in voluntary is following the rules is never voluntary. It's usually just assessments that are voluntary. You know, you can opt to give them $50 a month to put new flowers by the front sign, but it's not mandatory. You know, but following the rules, 100% mandatory. And I've seen that scenario come up where, again, a guy bought it thinking he could park his work truck there. The agents both said, oh, no, it's voluntary. He assumed that rule following is voluntary.
Well, and this house nobody had lived in it for quite a while, so it wasn't taking, and so my guess is they were like assessing fees.
Yeah, I'm sure there was like code, you know, there were
It wasn't
violations that needed pressure
Yeah.
washed, and then, you know,
Yeah.
the covenants allowed them to fine them $100 a day up to,
It
yeah.
was like thousands of dollars.
Yeah. So absolutely. So stuff like that. I mean, so, you know, a line of credit that maybe wasn't satisfied. And let's say, you know, a mortgage was paid at closing, but they forgot about a line of credit. Sellers said, oh, no, you haven't drawn on that for years. There was a balance. And they closed, and they did close with a payoff, you know, formal payoff. Your buyer purchases, and then all of a sudden they're getting, you know, notices from a debt collector saying, hey, you owe $2,000 on this line of credit. That title insurance would kick in. Yeah. I mean, boundary disputes, you know, as long as the survey was there. Now, you know, Some of that may get into looking at the surveyor because they fouled up, but at the end of the day, the new owner's protected, no matter whose fault it was in the background. You know, they were told that they got X, but they only really got Y, you know? So that'll cover, you know, boundary disputes. You know, again, like let's say someone died generations ago and it passed down, and you know, now you buy a property and all of a sudden some heir comes out of the woodwork and says, well, hold on a minute, you know, I had ownership in this property. It was never properly, you know, went through the probate channels. You know, you're not going to lose the house, but the title insurance would kick in and say, nope, you were a bona fide purchaser. You paid fair market value. There was nothing, you know, shady going on. So they're going to step in and remedy that scenario. And typically it's a matter of stroking a check. You know, they remedy it, they buy that. You know, let's say that person had potentially a 25% interest. They'd probably get an appraisal. It's 400,000. Your interest was worth 100,000, and they'll probably try to stroke them a check for 50, see if they'll go away. But you know, it's on them to remedy. And it's not, you know, as long as we followed our orders, it would be, you know, again, it would be the big boy company who's dealing, and they've got claims counsel on staff, and that's all they do is handle claims. So to kind of segue into that, so you know, the claim process is just that. It's you know, someone reaching out to you, some debt collector. Your first step's probably going to reach out to us, the agent, and say, hey, you know, I closed on this 2 years ago. All of a sudden I'm getting, you know, notices from a debt collector. What's going on? We dig into it with, you know, examining people and whomever we need to. And we would help you facilitate that claim, or, you know, it may just be a matter of putting you in touch with claims counsel. You're assigned just like any other insurance claim, and they would work to remedy it. You know, it may not be to the speed that you like, but, you know, it will be remedied because you've got a policy saying up to that insured amount. So, and rarely are you going to see where they're going to overinsure, you know, a property. If you paid 300,000 for it, that's assumed to be the fair market value. So they're going to insure up to 300,000. So if a claim is going to cost, it's a $400,000 claim, you know, they're only on the hook for 300. So potentially, if you bought, let's say, a rehab, you paid 200,000 for it, and then you go rehab it, now it's worth 400,000. You know, your title policy may only be 200, right? You know, the chances of a claim exceeding 200,000, but you would have that option. You could say, hey, you know, I've renovated this and I'd like to up that coverage if you so choose. So, and then the claims, again, you know, we go through its normal course channels, and you'd have claims counsel. So, anything else that I know I threw a lot at you and it was somewhat brief, but I mean, if I sat here and talked much longer about this stuff, you'd probably fall asleep. But, I mean, that's just kind of, again, it's more so for you guys to just have a general understanding and know why we're involved, you know, and why we ask the questions we do, either of you or of your customer. You know, so again, because, you know, customers, sometimes they think, you know, they sign the contract, they're done. And then you get some random third party who maybe they've never met asking them for, you know, somewhat proprietary information. And they're like, why are they asking this? Why are they digging into, you know, my grandfather's affairs? Well, there's reasons. They want to make sure that they get everything cleared so that, you know, again, that buyer's not looking to that seller for an issue down the road. So anything, Zoom?
So you ever have a problem like when the banks were merging? I remember in Massachusetts.
Yeah, so, and I had one the other day. It was a matter of, yeah, when the banks were either, you know, merging, going into receivership, bankruptcy, and then being acquired, or just simply assigning paper that didn't exist, right and left. Yeah. Yeah. So, you know, it was a matter of just assuring that when we got a payoff from Nation Star, you want to make sure you were paying the right party, that they had the right to collect that payment. And a lot of times the paperwork of record did not align. And so it was a matter of doing a little extra due diligence. That's somewhat subsided. And there's methods to kind of cross-check those things. But yeah, I mean, I came across one the other day, and we made the decision to close because it matured in February of this coming year, or January of this coming year. No one has received a statement in years, you know, nobody's demanding payment. So it was kind of one of those things. It's like the risk is nominal. It wasn't a huge balance. It was like a $50,000 line of credit to begin with. So it was like, you know, I'm not going to hold up a closing over that. I think we've done enough due diligence and, you know, asked the right questions. And anyway, we decided. Yeah,
In 10 years,
let's,
somebody's gonna get a notice.
let's,
that-
yeah. Right. Well, I mean, if it's an all cash deal, I mean, we can do stuff in 5 days, 7 days. Don't tell like processors that, 'cause they'll shoot me. But I mean, usually,
They'll be screaming.
if that's right, if we got a contract today, it's all cash. There's no homeowners association. Maybe the buyer's closing without a survey. We usually get a title report in a couple days, and then it's just a matter of putting paper together, getting the funding in, you know, in order. You know, surveyors now, you know, taking longer than normal. They just have more work than they need. You know, the estoppel certificates, you're kind of at the mercy of the management company or the HOA. So, you know, worst case, maybe 2 weeks. If it's financed, then really, you know, same thing applies for us. It's really lender driven, you know, the timelines. So, you know, 30 to 40 days in, you know, kind of generally speaking. Where are you from? New York. Okay. I would assume, well, everyone has attorneys up there.
It's also crazy.
Everywhere.
One of our attorneys gave us the Court of the County Clerk's record situation in Athens, still paper.
Oh, yeah.
Going back hundreds.
They still do that in Georgia. So in Georgia, you have to close with an attorney, and they physically send someone to the clerk's office who goes through all of the paper records, the microfiche. Yeah.
It's wild.
So it's a little, yeah. So Florida, thankfully for this scenario, you know, we've got the sunshine laws, so we're very open and public when it comes to records. So, you know, people are shocked when they come from New York, and I can pull up their divorce on, you know, the court
Yeah.
docket, or I can see that they filed bankruptcy. They're like, why do you know that? You know, we're just very friendly in that sense. So, I mean, it helps for this industry. You know, they may not like it, but, and the other thing too is, yeah, I mean, so we are a non-attorney state. So it's not required that an attorney is not required to close a real estate transaction. Although most settlement title shops are either, you know, attorney owned, attorney managed, have an attorney on staff, but it's not required. Whereas, you know, you go to New York, New Jersey, buyer's got an attorney, seller's got an attorney, lender's got representation, the settlement agent is an attorney. You know, so you got a table full of people.
And it usually takes longer. I know my cousin's house took freaking ever.
And they're shocked when, like, you know, a husband and wife come to buy a house and they're from New York and it's just the three of us sitting at a table. They're like, where is everyone?
It's much faster. One thing about looking at this record is how much nicer writing was. You know.
Oh, yeah. The penmanship then? Yeah. It's fun looking at some of those deeds when they start talking about, you know, Indian burial grounds, and it's kind of interesting. And then you see the actual physical stamp on the deed, you know, for the transfer taxes. Yeah, I've seen some interesting things. Some interesting like restrictions and deeds and reservations back when, you know, times were a little different. It's entertaining, but other than that, I mean, that's about all I have. Hopefully that was helpful and just kind of gives you, again, a broad view of the title side of things and title commitment and what to look for, what to ask. So thanks for coming. Thanks for sharing a few minutes with me, and sorry again I was late. But yeah, and anytime you guys have questions, I'll leave you some cards. Feel free to reach out.
So those are the schedules that we have to
Mhm.
because I see schedule C. This is more like, I think it's in Texas.
It's limited to, yeah.
Massachusetts.
I think it's in
I'll
Texas.
take
that I
one.
see.
Could be. Like I said,
Right.
it's in the
Yeah, I can see it. Yeah.
Yeah, no, he's,
Justin,
Maybe they may roll the legal description over to C.
I was processing,
Okay.
so that's what I know, that it's just a matter like, when they review the title. I saw schedule C,
I bet that's what it is.
and it
I mean, I'm
was,
trying to think what else they would include.
but that's what I say, like, probably it was much better than it was like, you know, we never review the title like, except that we have issues with homeowner association or if it is PUD, it
Yep.
has to be rights and things like that.
Yep.
But,
Yep.
yeah, thank you so much for all the information.
Oh, you're very welcome. Anytime.
So you are here?
Every so often. No, I typically work out of our Jackson